How's it going, everyone, and welcome back to a brand new video. Today we will be going over the proper ways to start exiting a position. This video will be focused on how to maximize gains and minimize losses. This will help you be more efficient when it comes to managing your trades. So this is how and when to exit a trade. But before we talk about how to never let a good gain turn into a loss, there are a few things that we as investors or traders have to acknowledge. This will help guide us through the process. The first thing to acknowledge is you can't time the market. You won't get out at the highs, and certainly you won't always get in at the lows. It's important to cut out your ego. You may be up on a trade, but not know how to exit. There's nothing wrong with selling some into strength. Let's say you enter a position and you are up a considerable amount, in this case 10%. Look to start locking in some profits. Locking in 20 to 30% of your position doesn't hurt. It gives you cushion. Because just as you're up 10%, you can be down 10%. Now, let's do some basic math to see how powerful cushion can be. So you buy 10 shares of a stock at $50, totaling $500. Your share price goes up 10%. It's currently trading at $55. You decided to sell 30% of your position, locking in $15 worth of profit, totaling $165. The markets get sloppy and your share price falls down to $48. You don't want to argue with the price and you sold your last 7 shares. Well, now you have $501 as opposed to taking a $21 loss at $480. Now let's talk about selling some into defense. Let's say you're in a position and instead of being up, you are down 2%. Just like we talked about selling some into strength, we can sell some into defense. So by locking in 50% of your position when you're down 2%, will protect your financial and emotional capital. We don't know the future. It could keep going down or it can go up, but by locking in, you're playing it safe. That's how you prepare yourself for the worst and best case scenario. Let's say it goes down another 2%. You're not going to argue with the price because you don't know the future. So you sell the rest, limiting your losses, only taking a 3% loss. But let's say the best case scenario happens and it goes back up. Well, you still have 50% of your position to be profitable. So you'll end up still being profitable overall. You see, it's important to have patience with winners, but have no patience with losers. This will help you, again, protecting your financial and emotional capital. So this is how you can start exiting your positions to maximize your gains and minimize your losses. It's really important to never let a good gain turn into a loss. Countless amount of times before, I had this problem happen over and over, and by me implementing this rule set, it has helped me a ton. Make sure to post your thoughts in the comment section below, and if you haven't already checked out my top 5 investing video mistakes, the link will be in the description. Thank you for watching.